Have you noticed how everyone seems to talk about home prices going up? The housing market is always portrayed as unaffordable, out of reach, and endlessly expensive. But what if I told you that in 2025, there are parts of the United States where home values are not rising, but actually falling? Would you be surprised to learn that in some cities, prices have dropped by as much as 10% in just 1 year? If you are thinking of buying a home, investing in real estate, or simply curious about where the housing bubble is showing cracks, then this story will grab your attention. So why is this happening? Across America, the housing market in 2025 is uneven. Nationally, median prices are relatively stable, and in many metro areas, affordability remains a crisis. But in certain cities, a mix of higher mortgage rates, surging insurance costs, overbuilding, and population shifts has led to a real decline in home values. Let us take a closer look at 6 cities where the data is crystal clear. Prices are going down, and the reasons behind those drops tell us a lot about the future of housing in the United States. Northport, Florida. We begin in Northport, Florida, a coastal city once marketed as an affordable gateway to Gulf Coast living. For years, it attracted retirees and families drawn by sunshine, beaches, and new construction. But in 2025, the story has changed. According to Zillow, home values in Northport have fallen by almost 9.8% year over year, with the median sale price hovering around $142,000. Why such a sharp decline? The answer lies in 2 painful realities. First, Florida's insurance crisis. With hurricanes and flooding risks on the rise, homeowners are paying skyrocketing premiums, or in some cases struggling to even get coverage. Second, builders got ahead of demand. A wave of new developments added supply just as interest rates rose and buyers pulled back. The result is a market where inventory piles up and sellers cut prices. For cash buyers, this could be a golden opportunity. But for anyone relying on a mortgage, the high borrowing costs combined with ongoing insurance issues mean the bargains may not feel like bargains at all. Cape Coral, Florida. From Northport, it is just a short drive to Cape Coral, and the pattern here is even more dramatic. Known as the waterfront wonderland because of its hundreds of canals, Cape Coral was once a hotbed of real estate speculation. In the pandemic boom years, prices skyrocketed as out-of-state buyers flooded in. But in 2025, Cape Coral has become one of the hardest hit markets in America. Redfin and Zillow both report declines close to 9% year over year, bringing the median home price down to roughly $350,000. What went wrong? Much like Northport, Cape Coral has been slammed by rising insurance premiums. Waterfront properties, once a dream, now come with staggering insurance costs due to hurricane risk. At the same time, inventory has ballooned. Homes are sitting on the market longer, and sellers are slashing prices just to get attention. For buyers, the sight of canals and palm trees may still be alluring, but the question lingers. Is this the right time to jump in, or will prices fall even further? Austin, Texas leaving, Florida behind. Let us move to Texas, specifically Austin. This city has been one of America's fastest growing tech hubs. In the past decade, companies like Tesla, Apple, and Google expanded here, fueling a population boom and sending housing prices through the roof. But the boom has slowed. Several reports, including Business Insider, suggest that home prices in Austin are down around 5 to 7% year over year, with some data showing even sharper month-to-month declines in mid-2025. However, Redfin's own data indicates that prices have actually risen slightly compared to last year. The reasons for these mixed signals are clear. During the pandemic, remote workers flocked to Austin, driving demand to unsustainable levels. Now, with many returning to offices or relocating again, demand has cooled. At the same time, builders rush to meet that pandemic-era demand, and new inventory is still hitting the market. Higher mortgage rates make it harder for buyers to qualify, leaving sellers with fewer options. For years, Austin felt like a can't-lose bet. But in 2025, buyers and investors are realizing that even booming tech cities are vulnerable, and the market data itself reflects this uncertainty. Tampa, Florida, back to Florida again, because the Sunshine State is seeing more than its share of corrections. Tampa has long been a favorite for retirees and snowbirds from the north. With its sunny climate, Gulf Coast beaches, and growing economy, Tampa was considered a relatively safe bet for homebuyers. But in 2025, the numbers tell a different story. Redfin reports that Tampa home prices are down about 4 to 5% year over year. That might not sound like much, but in a city that has been booming for decades, it is a significant signal. Realtors on the ground describe the market as a clear buyer's market, with listings staying up longer, frequent price reductions, and a growing inventory. The culprits are familiar. Rising insurance costs, higher property taxes, and affordability issues are pushing some residents to nearby suburbs or even out of state. While the drop is not as steep as in Cape Coral or North Port, the trend suggests that Tampa's long era of unstoppable growth is finally slowing down. Oakland, California. From the East Coast to the West, let us look at Oakland, California. For years, Oakland served as the more affordable alternative to San Francisco. It offered diversity, culture, and proximity to Silicon Valley, attracting thousands of buyers priced out of the Bay Area's most expensive neighborhoods. But now Oakland is struggling. Redfin data shows that home prices here are down about 10 to 13% year over year, making it one of the steepest declines in California. The reasons are layered. Tech layoffs across the Bay Area have cooled demand, while rising interest rates hit one of the most expensive housing markets in the country especially hard. Combine that with California's high taxes and cost of living, and many residents are choosing to leave altogether, relocating to cheaper states like Nevada, Texas, or Arizona. For sellers, it is a painful adjustment. For buyers who have waited years for prices to soften, it is finally a chance to re-enter the Bay Area market, though affordability remains a challenge even after the drop. Jacksonville, Florida. Finally, we return to Florida, this time to Jacksonville. This large city has often been called a hidden gem, combining coastal living with urban amenities. It has historically been more affordable than Miami or Orlando, which drew investors and new residents alike. But in 2025, Jacksonville shows a more complicated picture. Business Insider cites Redfin data showing about a 2 to 4% drop in home prices year over year, with the median price now around $320,000. Yet other reports suggest prices may have inched up slightly in certain neighborhoods. Inventory is clearly building, while demand is softening. Local economic headwinds and the same insurance crisis plaguing much of Florida are weighing heavily here too. For investors, Jacksonville still holds long-term promise thanks to its size and location. But for now, the market is cooling, and anyone buying today has to wonder whether prices will slip further or if the recent stability will hold. When we step back, what do these 6 cities tell us? First, the housing market in 2025 is not universally hot. It is fragmented and geography matters more than ever. In Florida, the triple threat of hurricanes, soaring insurance costs, and overbuilding has exposed deep vulnerabilities. In Austin, the tech boom gave way to a painful correction. In Oakland, the broader struggles of California's cost of living and tech layoffs are reshaping demand. Nationally, many markets remain steady, and in some areas, prices are still rising. But these 6 cities prove that housing markets are not immune to gravity. So what should you take away from all this? If you are a buyer with cash in hand, opportunities are emerging in places that once felt unreachable. Waterfront homes in Florida or urban property in Oakland are suddenly selling at a discount. But if you are relying on financing, high mortgage rates could offset those price drops. For sellers, the reality is more sobering. Gone are the days of multiple offers above asking within hours of listing. In these markets, selling often means accepting a lower price or waiting much longer than expected. The American housing market in 2025 is at a crossroads. Some cities are still riding high, but in others, values are sliding, sometimes sharply. North Port, Cape Coral, Austin, Tampa, Oakland, and Jacksonville are 6 very different places, but all face the same truth. Prices are falling, or at the very least showing mixed and uncertain signals. The question is whether you see this as a warning sign or an opportunity. Would you buy into a market that is dropping, hoping to catch the rebound? Or would you wait it out in fear of further declines? Either way, the housing market is changing, and these 6 cities are the clearest signs of that change. So what do you think? Would you buy a home in one of these cities right now? Or would you stay far away? Share your thoughts in the comments because your perspective is just as valuable as the data.